Good evening, everybody. It's 7 p.m. and we're going to make a game plan for tomorrow. We're going to start doing these game plans a little earlier so you have time to review the trades and we can actually make game plans for tomorrow. Right now we're looking at the SPY and we actually saw it pan out how we talked about. We were actually expecting this move yesterday. We did not get it. We got some consolidation. It would fail to break above. And now we see the breakdown that happened pre-market and then when the market opened, right? You could have gotten long here, but it's very important that you recognize that it's not the optimal entry because the moving averages were not in the correct order. If you came from this 1 hour chart down to the 15-minute chart, it would be definitely easier to play these candles on the 15-minute, but even though the price action on the 5-minute was pretty clean also, right? Right now, what we're looking for is the daily chart, right? We obviously see that we finished with a bullish reversal here, right? And we actually slightly touched this trend line we had previously talked about, right? So now what are we looking for? We're looking for a SPY to continue pushing higher and get above this 440 level, right? Which was the level that we had mentioned in the past. So now that we came to this trend line and we have this bullish reversal here, anything above here would be an optimal entry on the daily chart. So now that we know that, we can go back to the time frame that we can monitor. So that means that for you new members of the community, that means that if you are a day trader, you're monitoring trades according to the 5-minute chart or with whatever time frame you choose. So if you're a swing trader and you're monitoring this every 15 minutes, then that requires you to be in front of your screen every 15 minutes. So that means the 15-minute chart, you're looking at the 15-minute chart, you see an entry, which could be this higher high, higher low here, and then you go set up your risk to reward. So your entry candle is going to be your risk to reward candle, and the stop loss is at the slightly below this candle, and 3 times this candle would be your take profits area. So if we map that out on this chart, you can clearly see here that risk to reward would be right here, and reward would be about here, right? So definitely hit that 3-to-1 risk to reward today. If you took that trade, congratulations. This is just a trade that you would take with very, very minimal amount of money. So if you would normally go into a trade with $300 to $500, let's say $1,000, if you normally go into a trade that's perfect with $1,000, because the moving averages aren't perfect, you would just put on a P1. A P1 is a initial entry, so that would be maybe like 1/3 of your position. So if you normally go in with $300, that would be $100, and so on and so forth, right? So this is the way you would map this out on the 15-minute chart. So what I really want you to notice is that there's no guesswork. Right here would be optimal, right? You see a lower high and a lower low. This would be the entry, and then you would have gotten stopped out here, or you would have ridden it in a momentum type fashion where you're trailing each candle, right? So in the course, if you went over it, the momentum strategy is that you're not sure of the market conditions. They don't look like it's too clean, which is definitely something that we saw today, right? With the daily chart being bullish and we see a sell-off, that is not clean price action. So you can switch to the momentum strategy instead of using the moving average take profit strategy. So in momentum, you would have simply entered on this candle and trail it to the last candle, right? So as long as we remain with lower highs, we're not selling. So right here, something changed. Why? Because we got a candle that crossed above here. So immediately you would have exited that position on the 15-minute chart. That's a momentum style taking profits. So in this case here, we're trailing the bottom of the last previous candle. So as long as the price action remains below the previous high in a down movement, you're in the trade. And as long as the price action remains above the previous low, you're still in that trade. So in this case, this candle would have taken you out from this entry down here, right? So these are momentum profit taking strategies. Now, if you're on the 5-minute chart, you have to give it a little more wiggle room. And the profit taking strategy on the 5-minute chart looks more like this, right? Let's say you entered on this higher high, higher low entry, and this was the entry candle, right? So immediately we are going to place our stop loss at the bottom of the entry candle, slightly below. So higher high, higher low. Let's say you entered on this one. So the stop loss would be slightly below this one, right? So let's say around here, and then 3-to-1 risk to reward, right? On the 5-minute chart. So let's put this up to 3, which you can see right here. This is 3.03, right? So now we are looking for a 3-to-1 risk to reward. So boom, you got it. As soon as it gets halfway, you move this trailing stop loss to break even where you entered. And now you're simply waiting till you get to the 3-to-1 risk to reward, and you're looking at each candle and you're saying higher high, higher low. Oh, this one came down. If this one trades below that one, I'm out, right? So you're still in the trade here, right? This one traded below. So this one has to trade below that one, right? It traded above, so you're still in the trade, right? So now you see a continuation here, continuation. This one came below, right? And then this one took you out, right? So the first one has to trade below the previous, and then the second one takes you out. So basically, we're trailing it candle by candle, okay? So on the 15-minute chart, you don't have to give it that much wiggle room. On the 5-minute chart, for sure. So this is why I say that if you don't have the experience, you definitely should not be trading on the 5-minute chart until you develop the habits on the higher time frames for you to be a bull, a bear, to follow the procedure, the 3-to-1, to see your entries, to know your entries, to recognize if this is in harmony, meaning that the daily chart is bullish. In this case, the daily chart is bullish, but the 15-minute is not. Does that mean you cannot take the trade? If you are a newbie, I would tell you no. But if you want to continue to trade, I would tell you yes, but you have to go in with less money. So that would be P1 entry, which we would call a 1/3 of your position. So we're quickly going to go over some of these ideas that we were looking at, and we're going to start off with the bullish ideas, right? So I'm going to go back to the maybe 2 frame so that you can see the hour and you can see the daily. So here we have SPY. We're seeing that we saw a little buying over here, right? So this was coinciding with the trend line that we had previously drawn on Monday, right? So now this trend line is invalidated, right? We can get this out the way. And so is this box invalidated because now we have a new trend. So anytime we break out of the box and the previous line gets eliminated, and now we have a new trend. So once this trend breaks, now once we find support, we can create a new box, and this would be the high, and the first support would be the low, and we would have a new box looking for the next breakout, right? So in this case, this is the trend line, right? This is the trend line, and this is the hour chart. So now we're going to go over these ideas that we were looking at together, and we can pretty much get an idea of what's going on. So Tesla is holding up pretty good, right? So we saw it came down to the support of previous day's price action, and now we have a inside day candle. This is a strong consolidation candle, right? So that means that above this daily candle and below this daily candle is really going to dictate direction. So now this is a bullish idea, And we're looking for this to break above this inside candle. So now we have 280 is the point that we're looking at, right? We had this pennant right here, broke down, retested, kind of, not really. But we're still holding up in this hour time frame, right? We have to break below this previous day's action in order to be bearish. So tomorrow, if Tesla breaks down below 272, can you take a put? Yes. Is it full share size? No. Okay. If you were a newbie and you're new at this, I would tell you trade in one direction, because that's the direction where the strongest money is being allocated. So you don't want to short this thinking that you're going to swing this short. This would only be a short day trade, because all this price action is telling you that we're bullish, right? So that's just something for more advanced traders. If you're new at this, I would definitely say do not trade in the opposite direction of the higher time frames, because it's going to kill you. And you need a higher amount of skill level, and you need a higher amount of awareness to do that. So we have Tesla here in the bullish side. We have Apple. Apple's also holding these moving averages here. And we actually saw a breakout with Apple. Now we want to get above this 50 period moving average. And after you get above this 50 period moving average, you can choose to trade, let's say, the 30-minute time frame as a swing. So here you would have already had an entry, right? So higher high, higher low, and 3-to-1 of this candle is what you're looking for. So immediately, right, bullish on the daily, and I want to swing on the 30. So I'm waiting till these moving averages are in order. I look for an entry, higher high, higher low, and I'm gonna go over here, set up my risk to reward, right? I entered already, right? I'm setting up my risk to reward, right? I'm choosing my contract for the amount of time I plan on holding it. I would always recommend you go at least 2 weeks, right? At least 2 weeks, so that the volatility doesn't kill you, right? So now we're looking for a 3-to-1 risk to reward. So now risk to reward is up here, and that risk to reward is at 192, and the bottom would be here, right? At the bottom of this candle, you bring it down slightly lower, and you bring this slightly higher to make it back to the 3-to-1 risk to reward. So quickly, if you map this out, if you entered here, now you're swinging this. Now you're holding this overnight. Tomorrow, this is the stop loss down here, right? So if we trade below here tomorrow, now you know I cannot be in this trade any longer because it hit my stop loss. You simply go to other bullish ideas and you look for ideas there. So this one, quick, right? We're bullish on the daily. Everything is aligned. The 9, the 21, and the 50. Oh, look, but right here we're bearish. So this is only a day trade bearish stock. So maybe I want to day trade this and jump down to the 15-minute because I see it's breaking down. And for some reason, I can't find any other bearish ideas. But look what happens when you go against the trend, right? You see it comes down, hits support, buying. Comes down, couldn't break new lows, buying again, right? So this means that bulls are somewhat still in control. Even though you see all this bearish momentum, you definitely see that the bigger time frames are always in control. And as a result of that, we finished at the bottom of the box with a bullish reversal. So tomorrow in Amazon, you can definitely take a trade above 128. That's what we're looking at, right? QQQ, right? Really fast. We're looking at this daily chart, bullish reversal here, right? We're looking at a swing, right? So maybe the 30, maybe the hour. So we're gonna go to the smaller time frame and say, hey, I want to swing this on the 30 because I'm able to check it every 30 minutes when the candle closes, right? So now you see higher high, higher low, and immediately you go and you set your risk to reward, right? Boom, right here. You set the stop loss a little below the candle, and then you measure this out. So that's a 3-to-1 risk to reward, and that 3-to-1 would leave you right here, right? So that means that you're swinging this in anticipation of hitting up here, and then you're switching over to the profit maximizing strategy, right? When you hit this 3-to-1 risk to reward, it's important that you went in with 1/3 of your amount, right? Because it's not in harmony, right? You see the bullish momentum here, but we have bearish momentum over here. So we're not going in with full size of a position. We're waiting until we hit this 3-to-1 and we're above this 50 period moving average. And then you can start adding contracts if you see another entry above this 3-to-1 risk to reward or above this 50 period moving average, right? So now we know we're still bullish reversal here. We're going to wait till maybe you want to wait until this above the 50 period moving average so that you can find an entry and then 3-to-1 risk to reward that and go in with full share size because everything's in harmony once we're above this 50 period moving average. So I hope you see the trend here, right? So during the day, you're looking through these stocks and you're going Tesla, bullish on the day, bearish on the smaller time frame. I don't even want to touch it, right? SPY, bullish on the day, bearish on the shorter time frames. Oh, look, I see an entry. Maybe I could put on a small amount there, right? Apple, same thing. Oh, look, we got above the 50. Maybe I can start looking for an entry here, right? So that you can quickly determine that. This is what real trading is about. It's about looking for the opportunity. It's not about staring at one stock the whole day waiting for that stock to give you what you want. No, you have to go out there and find it. So now we have Apple that's shaping up here to give you a good risk to reward, right? So you have QQQ here, you have Coin, you have Nvidia. Nvidia is bullish on the daily and bearish on the smaller time frame, but you saw an entry down here. So you go in with small share size. If you're gonna buy 3 contracts, don't buy 3, only buy 1, right? If you can only afford 1 contract, then don't buy here. Wait till you get above because you don't have the account size to take that type of risk. For people who have a smaller account, you need to wait until everything is in order. You need a perfect setup. This is what all traders talk about, the perfect setup. The perfect setup means right now for us and the strategy that we use is everything is in order. The daily, the monthly is green, the weekly is green, the daily is green. And now we're looking at this 30-minute time frame and we're telling ourselves, once this 30-minute time frame looks like this, I'm looking for an entry and I'm going long, right? Now we're looking for AMD, right? AMD, bullish on the day. No, actually it's bearish on the day, but it's holding up this 50 period moving average support. And now we're looking for an entry here. But even if this is perfect, recognize that this is not. So now you still have to go in with a smaller dollar amount because this might be perfect, but this is not. How many times do I see people putting on trades where this is completely bearish and this is completely bullish, and maybe they think that that's a great idea, but in reality, you want to be on the same side as smart money, right? This is what it's about. It's about increasing probability and having it on your side, right? So now that we went over a few bullish ideas, let's go back to the bearish ideas. And in the bearish ideas, we have Target, right? So if you were trading Target today, you would have said, wow, look at this. It's bearish on the day and also bearish on the smaller time frame. So immediately, once you see bullish action came back down and you see this bearish reversal, this could have been an entry right here, right? So now you go over to your 3-to-1 short position. By the way, on any trading platform, you can draw this out manually. TradingView just happens to have a really good risk to reward indicator, right? You can call this an indicator or a tool for that. So right now, 3-to-1 risk to reward on Target, and you got in this trade today, and you have this risk to reward up, and now you're looking for the PT, and after PT, you are transforming your trade from the 3-to-1 to the profit taking strategy, which is in the course. So you have Disney, right? So now you're looking at Disney. Wow, look at this. It's the market opens, comes down. You have a 3-to-1 risk to reward. Never hit your stop loss. If you come here and you do a bearish trade, and you do this as your 3-to-1. Actually, let's put this down here, and this is the 3-to-1. Remember, this is why I tell you a little above or below the candle. Right now, you never got hit. If the market continues to trade lower, you're still in this trade. You're still in this trade. Once it hits halfway, then you move this to the point that you entered, right? And then if it breaks back in the opposite direction, you put on your big boy pants and you get stopped out, right? So we have these bearish ideas in the bearish momentum for that reason. Look, Starbucks, bearish idea. We went over this, right? Bearish idea. We saw accumulation, and now we're seeing a breakdown. So this that we saw here was not exactly accumulation. So this is why you still have to have it as a bearish idea until it tells you otherwise. There's no guesswork here. I can't emphasize that enough. It's not about guessing. It's about putting probability on your side. So right here, you could have used the 30-minute or the 15-minute. Right now, you would have had this lower high and lower low and 3-to-1 risk to reward that, right? So you would still be in this trade looking to take profits at the next resistance. So the second part to that, right? When you are taking these trades, you're obviously looking at the daily chart as well, and you can clearly see that we have room until the next support, right? So if we go back to our bullish ideas and we look at the bullish ideas, for example, Tesla, we can clearly see here that we have room from 283 up to 306. So right now, if we break up to the upside, right, if we break above this 280 level that we pointed out tomorrow, we know that we can swing this on the shorter time frame, because on the daily time frame we still have room until 306, right? So this is the steps, guys. Like, this is how easy it is. Like, you're literally going through each stock and you're evaluating, like, does this have an entry? Does this have an entry? Does that have an entry? According to the time frame that you're trading. So if you have any questions or ideas you want me to review, please post it in the Facebook so that we can say, is this a good idea or is this not a good idea? And you would only be helping yourself. Get your ego out of the way. I'm here to help. I want to help, but you have to help and acknowledge that you need the help, and post the ideas in the Facebook with the charts, and not necessarily the charts, but in the format that I gave you to formulate it, and to put your entry price, your stop loss, 3-to-1 risk to reward, and does it have that potential, and is the idea perfect? All right, guys. Let's also update. I'm going to update the ideas by writing them out on the Facebook page. I want to make that our place where we actually have conversations and ideas, and we share what we're thinking about the market. But it's important that we're all here together to share the structure that I'm giving you, and that you use it, right? Because I know the structure works. It's not about guessing. It's not about adding a whole bunch of different things to your trading. It's about having clear-cut decisions and you being able to make those decisions. All right, guys, have a good night. And we're going to have a game plan review in the morning. So post your ideas, because around 8 a.m., I'm going to read the ideas and I'm going to tell you what I think about the ideas, so that you can prepare accordingly to your risk to reward and the ideas that you're posting. All right, guys, have a good night.